The senior deduction, this whole concept of no tax on Social Security is technically incorrect and practically mostly correct. Let me explain what I mean by that. So for seniors or individuals 65 and older, they're going to get, or you are going to get, an extra $6,000 deduction. This is above the line. So this is a pretty sweet little Benny to people 65 and older, which means you can itemize, you can not itemize, you get it either way, as long as you qualify. So it's $6,000 per individual. So for a married couple, it's potentially another $12,000 of deductions. Here's how it comes into play. The standard deduction in 25, I think it's $31,500 this year. As a 65-year-old prior to the big beautiful bill, but you got $31,500 in the standard deduction, and you got another $3,200 bump essentially for being over 65. Okay. Now, when you add the new senior bonus of another $12,000, we now move from $31,500 standard deduction to $46,700. When we move to $46,700 of deductions, it's essentially saying your first $47,000 of income is income tax free. So when they say no tax on Social Security is still going to be taxed unless you only have about $50,000 of income. Then it's not going to be taxed. So let's be clear about that. The other thing is it also phases out. So it phases out for individuals who make over $75,000, and it phases out for married couples who make over $150,000. So what this did, this additional senior deduction, was it basically made the taxation of Social Security, where formerly about 64% of Americans paid no tax on their Social Security, now it's going to be about 88% because we have more tax-free income.